I had a very successful event in Singapore. I was there for 10 days. A lot of you showed your affection on me wherever I went, whether it was the streets of Singapore, whether it was at the restaurants, the malls, and more particularly at the events. I wish to thank all of you from the bottom of my heart. My team felt that I had never done a full fledged event in Abu Dhabi, and they wanted me to do so because we have a lot of friends there. So the next event would be in Abu Dhabi on the 5th of October. Those desirous of participating in that event, drop a message at the WhatsApp number given below or send a mail at the email given. My team will get in touch with you.
Hi everyone, welcome back to Be Rich. I brought Anand in today because yesterday we had that news of the Fed cutting the interest rate, and there was a lot of talk about should have been only 25, why did it do it as a 50? Is there something to be worried about? Then, of course, the projection of the rate being slowly brought down all the way to around near 3% by 2027. And the market was jubilant initially, then the Dow corrected and ended negatively. The Japanese market opened jubilantly at 3% as we're recording. It's a little less than 3% now. While the Indian market opened little positive than as expected. Got tipped again. And those usual companies which I tell you guys to take into consideration are still at enviable positions. And of course, gold. Initially, gold in the US has gone up, but here in India, this seems to have gone down. And the dollar, instead of becoming weaker, is looking stronger against the rupee. So I thought I'll talk to Anand about this. And why is it so, Anand?
The first answer to your first question, why he did two instead of one. Even normal circumstances, he would have done one. The next meeting is on the day of the election.
Okay.
And they will not know who is the president.
Okay.
America will be in a state of flux at that time.
True.
So he wanted to avoid the political mess.
Okay.
So he didn't want to cut. So he will pass next time.
Okay.
With the election right around him, unless there is a sure shot recession, and doesn't look like a recession because last quarter's growth is at 3%. So not new data wouldn't have come, and they wouldn't have called recession in September. So in November, unless the data supports it by a very big way, he will most likely give a pass because there is already a descent.
Okay.
And he has said the dot plot indicates there will be 2 more 0.5 rate cut this year.
Okay.
That could come at the very end.
Okay.
Unless there is a overwhelming data, he will not be able to cut in the month of November because there will be election and he'll be called impartial.
True.
He's not impartial. Already Donald Trump has attacked him.
True.
In India itself, there are various debts. You have asked me about gold, as in gold bees. Gold bees doesn't track gold exactly. There's a tracking error.
Yes, there's a delay.
Let's take 17th of September, which was 2 days before. Madras was saying one price. The Bombay was showing another price. There is a 50 rupee gap between Bombay and Madras for 22 karat gold. So there cannot be one accurate price of gold. In fact, the All India Jewelers Association was saying one India, one price. We don't have a one India, one price.
Currently, we don't have.
Second, in India, there is a problem because there is mix of legal gold and illegal gold.
True.
The illegal gold was almost 50%. That is why if you have seen after the duty cut,
yes,
the import of gold has surged by a huge margin.
True.
That means the legit gold has gone up.
Yes.
And that definitely means illegal gold should be coming down.
Yes.
But this is wedding season.
True.
So the legit gold guys might have bought more. So we need to watch the trend.
Okay.
So the Indian gold prices are distorted by two taxes. One is the GST tax, which is 3%, which is levied separately. The other is the tax on imported gold.
True.
Which is still about 6% is there. So the distortion, there are two distortions. One, there can be a tracking error. Second is the distortion between legitimate gold and illegitimate gold. So you won't have a perfect tracking because if too much illegal gold comes, it will bring down the price of legitimate gold because there will be no demand.
True.
And in gold, what happens is gold comes through banks, gold comes through other sources, and it's all manufactured by a few manufacturing units and distributed across all retail.
Yes.
So we do not know very clearly the rate because there's a 50-100 rupee rate difference.
Yes.
So you can say 6,850 or 6,825 to 6,900. But one thing is very clear that the trend of gold is up because in 2027, if it is going to be 3%, gold is going to be at 4,000.
Very true.
If they reach below 3,
Yes.
gold will be at 4,000. Because I have not read the transcripts properly.
Yeah.
How much he is cutting, there is another way that tightening happens. That how much of the bonds he is not buying back.
Very true.
Normally what happens is when bonds get matured, he buys back. And he said when 2-3 banks failed at this time, he said, no, I will not allow the banks to fail. And he cut the burn rate. That is, instead of letting go of $50 billion of bonds every month, he reduced it to $25 billion.
Yes, kept it more liquid.
Yeah. And so he injected more liquidity into the system.
True.
So whether he has tampered with it or not, I do not know.
We'll have to see that.
We have to see that. So that is basically at what rate he is contracting money supply.
Yes.
But I don't think they have the nerve to reduce the balance sheet to where it was originally. At first signs of trouble, that will also be eased. So all indications are over the next period of 2 years, even if the economy soft lands, money supply will be abundant.
True.
And cost of money will come down.
Yes.
Therefore, the rate of gold will go up.
Okay.
So these short-term distortions are what I told you.
Okay.
Now, on the US market, while it surged immediately, and when it surged, people started taking profits.
True.
So these are short-term trades.
True.
That is why Peter Lynch told Charlie Rose many years ago in an interview that the effects of the rate cut take a long time to trickle through the economy.
Very true. It's not like immediately credit card rates stop.
Yeah. So tomorrow it's not going to change anything in America.
Yeah, mortgage rates don't immediately change.
They don't get up tomorrow morning, it doesn't change.
Yes.
So the impact on earnings will also take a long term to travel. So whatever you are seeing is short-term distortions. There was no profit taking in Japan because Japan went up. In India today, what has happened is the Nifty went up 130 points.
Yes.
But the broader market is very weak.
Yes.
Like the bank index has gone up because HDFC Bank has gone up, ICICI Bank has gone up, and IndusInd Bank has gone up. That means the large private sector banks have gone up.
True.
And the public sector banks have gone up.
True.
But the smaller private sector banks, which we are looking at, was correcting when I saw. And Pharma is correcting. And Tata Motors is correcting. So the market is on a way going up. The stocks we want are correcting.
Showing opportunities.
This is why I say most guys don't have the mental maturity to wait. You still think that you say you are my follower and you are immediately worried about what is happening today. If you don't need money for 20 years, why are you worried about what's happening today?
Very true. So, in that same note, some of our viewers have been asking me on Instagram saying, like Sundar and Karthik, another one who asked, so is it a right time to consider gold?
It is a right time to consider gold because in the next 20 months, it should go up by 15%.
Okay.
Unless something dramatically. I do not know whether things will dramatically change. I cannot predict. Yeah. But as of it now, it looks like in the next 20 months, it is going up 15%.
Well, another viewer is asking, do you think another rate cut is possible this year? Well, you just answered that.
Maybe. No. In November is not possible, but there's another in one at there are 2 or 3 meetings. I do not know the cycle. They will skip November and the one after November, they may go big again if the trend line continues. It's all dependent. He's saying at one time the dot indicates that there'll be 2 rate cuts. Then we'll go meeting by meeting. If inflation flats up, maybe he will not cut. But if really declines in the next 2 months, even November he may give another rate cut. He don't know.
Okay. And another viewer is asking, what will RBI's reaction be? Do you think RBI will do any rate cut in India based on this?
See, the problem in RBI, the RBI cannot afford a rate cut because already people are not putting money in banks. Okay. Then they say that no, it's going into stock markets. It's not the problem of it going into stock markets. Whatever goes into money, go to mutual fund, from your account, it transfers to mutual fund accounts. From there, it is transferred to somebody else. So money is moving from account to account. It is not sticky.
Correct.
So we need sticky deposits. For sticky deposits, interest rates have to go up. The interest rates on deposits have gone up. They have not gone up to the level they would like it to go. The primary problem is there has to be a CRR cut. That is the amount of cash banks have to keep in RBI.
Yes.
And the second thing is some bureaucrat in the finance ministry, in a so-called intelligent move, has decided to keep all the government balances with RBI, so has to reduce its interest. But if those balances are maintained in public sector banks, their deposits will be easier.
True.
So these are the two fundamental factors.
Okay.
I do not know, because the Indian inflation measurement is not very good. Government claims there is no inflation, but on the streets there seems to be a lot of crying for inflation. If they want to cut rates, it would rather be better to cut CRR and infuse liquidity into the system than to cut actual interest rates. If you cut actual interest rates and keep CRR same, the liquidity in the system will not change. What banks need is a cut in interest rates.
Okay. Another viewer has been asking that FIIs always look at the short-term gains and losses, while FDIs have been pulling money out of Indian markets for quite a long time. Do you think there will be a U-turn now that
There
FDIs...
already a U-turn in September.
Okay.
They are buying more than what they are selling. But again, it depends on the news flow and the emotions outside. But as of now, FII actions will not in the short term not matter because there is high liquidity bubbling in the mutual fund industry.
True.
So they have like 2 lakh crores of money lying. So anything FII dumps also these guys will buy. Like us, what happened? If both of them buy, certain stocks will go up. Now, very interestingly, in HDFC Bank, what has happened is they have been busy selling their loan portfolio. They have already sold about, or at least if you total up everything, nearly 20,000 crores. That's about $2 billion of loans they have sold. They would have liked to sell the builder loans. They have not been able to sell the builder loans. Rather, they have sold the auto loans and the credit card loans, the choices loans, where they are making a lot of money. So this will have an impact on their P&L. But the market feels that the credit deposit ratio problem is solved because a lot of credit goes off their books. And when the credit goes off the books, the credit deposit ratio will fall, giving HDFC Bank a breathing space. And that is why HDFC Bank crossed 1,700. And that's what is driving the bank index up.
Okay. Another viewer is asking that since the Fed's main move was inflation, are they overreacting and cutting it too fast, and maybe will inflation spike again? Is there a possibility of that happening?
See, it's too early to say anything. It all depends on what is the expectation of people.
Okay.
One thing against inflation is what can spike is fuel can spike. But because overall demand for oil has been declining, except in India and China, what has happened is crude has corrected huge. So crude has to rally 20% for inflation to go out of control.
Okay.
But crude is correcting all the time, and crude corrected yesterday also.
Okay. Another viewer is asking, now that the dollar will start losing some value, and will the Indian rupee gain value, and the arbitrage we're looking at pharma companies exporting, IT companies exporting, is there any change in that?
For me, there is no change because of the simple reason. That means your people don't look at any data. The data that came yesterday said the gap between exports and imports in India is $30 billion.
True.
That means we are not exporting enough.
Yes.
That means you are in perpetual need of dollars. You are depending on capital flows.
Yes.
That is, you are depending on 3 things. Your software exports.
Yes.
You are depending on your labor exports, where people who are abroad send money back home. And third, you are depending on foreigners financing your investment needs.
Yes.
And so all these show that the rupee is going to be weaker.
Correct.
Yeah.
So if the rupee is weaker, you guys, that means export from India will be more lucrative, and these Indian companies which are earning in dollars will also be lucrative, is what Anand is trying to tell you. Anyway, I hope this broadly answers what the views are about this Fed interest rate and how the markets reacted. And as promised at the Instagram, I've asked Anand to answer your questions in brief. We'll try and talk about it more during the weekend in the MoneyPechu videos in Tamil. So those of you who are interested can definitely come and catch his videos on Saturday and Sunday, where we'll talk about this and the impact on the Indian markets and Indian companies in greater detail in Tamil, of course. Thanks for watching the video. Do subscribe and turn on the bell notification icon so you'll be notified when we put up new content. And do leave your comments down below. We definitely do read them. And once again, we'd like to thank you.
Thank you for supporting Birich. I hope you enjoyed this show.
Hey guys, welcome back to Birich. Before we get into the video, I wanted to bring to your notice that my uncles VinodSrinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog/newsletter where we're going to post our original research onto it, and we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to birichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.